The four largest banks in America have just lost over $50 billion of value this week alone, and the carnage was not restrained there. We have seen a number of huge $100 billion banks halt trading this week and lose over 50% of their share price in a handful of days alone. Of course, we're talking about the infamous Credit Suisse, First Republic Bank, and last but not least, Silicon Valley Bank.
The real questions we should be asking ourselves are, is your local bank safe? Will FDIC insurance save the day? And is this the next Lehman moment?
Welcome back, guys. I am back with George Gammon's research assistant, Josh, for an analysis of what we think could be the Lehman moment of 2023. Banks all across America and more broadly around the world are absolutely dropping like flies. And the biggest one that we think is in the most amount of trouble is Silicon Valley Bank. It is a $44 billion giant. But all that has recently changed as the American banking giant has lost tens of billions of dollars in market cap value, and the share price is down by over 86%. Josh, what are your thoughts on the situation surrounding Silicon Valley Bank?
Before we go into what the issue with Silicon Valley Bank is, we have to go back to the last Lehman moment. What happened in 2008? Well, all these banks were leveraged up on mortgage-backed securities and treasuries that were losing value by the second. So what happened? They were taking these huge losses that were forcing them into bankruptcy. What regulation happened after 2009? They changed the market-to-market accounting rules, and people like Jeff Snyder say that could have been the catalyst for stopping the GFC. What is market-to-market accounting? It is basically saying, I buy this treasury at 3%. That is the interest rate that I'm going to get at the end of the maturity. And so we are just going to mark it on our books at 3%. Even if the interest rate goes to 20, 50, 100%, and we are sitting on a 99.9% loss, that doesn't matter because we are just going to mark it for what we paid for it. So what is happening with Silicon Valley Bank? They just bought $80 billion of mortgages in 2022 for 1.35% interest that have just been obliterated. The super important part with that is they were buying long duration debt that you could not market to market. Therefore, they had to actually put the loss on their balance sheet. So they are just getting crushed. This is very important for understanding if we are going to see systemic risk from Silicon Valley, or this is going to be a contained demolition.
So Josh, is your local bank safe?
Is your local bank safe? Well, it's more nuanced than that. Let's look at Credit Suisse right now, who's 300% bigger than Lehman. Right now, they are having the biggest bank run on history. They're having to compete for deposits, but it is hardly working. You have Silicon Valley, who is looking like they're just completely obliterated. 53% of what they own is securities, who are massively underwater, which they are having to market. Nobody wants to do business with them. They're having a bank run. First Republic, down 60%, is also having a bank run. So surface level, we see these three banks, no correlation at all having massive issues around the same time. Why is this important? What are other banks going to do when they see this? They're going to start tightening up their books. If they do need a loan, it is going to be fully collateralized in the repo market. What does that mean? That means less transactions. So what could that potentially do? Well, that is going to wash the tide out of all the other banks who are also having issues underneath the surface that we can't currently see. And it is going to bring a lot of inherent risk for everyone else. And as we said earlier, the most important thing, actually the only way a bank can go bust is if other banks collectively agree not to do business with you. So if we start to see this with these three banks who seemingly have no correlation at all, what other banks are in the same boat? And we know how financially intertwined everything in the financial system currently is. So is your bank safe? I don't know. It seems like there could be a lot going on underneath the surface we can't currently see.
So Josh, that sounds like the banking system is suffering from a little bit of this thing called contagion, okay? And where there is contagion, there is systemic risk to the system. And that gets us into talking about that second point that we mentioned in the beginning of the video, FDIC insurance. Most people think that they are safe with their bank accounts because we all hear the rhetoric, okay? The propaganda tells us that our bank accounts are insured by the FDIC insurance. But what they don't tell you about the FDIC, it does not protect you from a systematic bank run and an enormous 2008 or 1929 style banking collapse, okay? It's only going to protect you if you have one small bank who is isolated and they suffer bankruptcy. If you see a systemic, widespread banking crisis, the FDIC is absolutely useless. And what's even worse, if you have money in the bank, they are going to actually bail you in, meaning they're going to steal your deposits. I know what you're thinking. You sound crazy. You're just another Bitcoiner. Well, let's hear it from the people at the FDIC themselves, okay? They had a closed door meeting in November 2022, and they said the quiet parts out loud in this video.
Important that people understand they can be bailed in, but you don't want a huge run on the institution. But they're going to be.
There you have it. They said it. They said they could bail in your deposits, and they actually said, we see some serious risks on the horizon. This was, again, recorded in November 2022, a closed room meeting that was recorded and leaked to the public only recently. And guess what else they said? They said that the only people who deserve to know this really alarming information surrounding FDIC insurance is sophisticated investors. The everyday plebs like you and I, nah, they don't need to know because we don't want to trigger a bank run. They said it. If we trigger a bank run and scare the public, we are going to have a systemic banking crisis, and our FDIC insurance is not going to save anyone. That's in their very own words.
So what is the market actually predicting with all of this information? Right now, this is the most bonds have ever been down since Black Friday in 1989. That is super significant. So you would expect the dollar is ripping, right? No, the dollar is actually down. Why is this important? The market could potentially be pricing in a government bailout. And if that happens, what happens to the dollar? What happens to bonds? What happens to inflation? Are we going to see the hyperinflation that everyone has been talking about? I don't know, but the market is starting to price in rate cuts already towards the end of this year.
So the last thing we wanted to hit on in today's video is this the next Lehman moment? Okay, my personal take on it is I think the global financial system is even more interconnected and even more leveraged than it was in 2008. So I think the risks are far higher. And I think that is proven by looking at the volatility associated with each recession we've seen since 2008. The 2020 crash was the fastest crash we've seen in human history, and the Fed had to step in with over $2 trillion of QE alone to backstop the treasury market. That obviously dwarfed the $600 billion bailout in 2008. So I think each recession is getting more volatile, the crashes are getting bigger, and the bailouts are getting bigger. So I think what we're living through right now is potentially bigger than Lehman. But Josh, what do you think?
Hardly does the last crisis look like the new one, but I don't know. It seems like all the signs are currently pointing to a banking crisis. Maybe that is because we have not yet recovered from the 2008 Lehman crisis, but that is a completely different video for a different day.
So what can you do to protect yourself from a systemic banking crisis? Well, I believe there's only one asset that you can hold outside the banking system. Of course, that is Bitcoin. It was created in 2008 in response to the 2008 global financial crisis. Satoshi Nakamoto even included into the first block of Bitcoin a picture of the chancellor on the brink of bailout from the UK. So of course, get yourself some Bitcoin, get yourself some money outside the financial system. And we're talking about counterparty risk. So if you're going to buy some Bitcoin, put it into your own hardware wallet. We're thrilled to be partnering up with the Foundation Passport hardware wallet. You guys can get $10 off that puppy if you use promo code BEAST. Link to that one is in the description. If you made it this far into this video, I'm sure you're going to love another two videos I'm going to slap up on screen right now. And with all that said, like and subscribe so you see another video with me and Josh in the not too distant future.